Let's try that. Does it sound better? Okay, I think we're all set here. Okay, so all right, good. Okay. We're doing a duel to free trading room for this, and I might have to just go YouTube because it does seem to cause some issues. So this trial of charts and coffee in the morning might be well, we might go on only YouTube only. Well, that way it's accessible to anybody. All right, so back to Forex Factory. All right, so let's yeah, we missed out on the deepest secrets of the stock market. Now, all I was mentioning is that Friday today, remember ECB Lagarde, we have the follow up of yesterday's ECB announcement. If you notice, between 8:15 and 8:30, there was a good bit of volatility. So do not underestimate how much the ECB can affect the U.S. indices. We've got member George speaking today, member Waller. This means we do have some Fed speak. Now, what I was mentioning is please check out 2 calendars, 3 total once we go back into earnings season. And the other calendar is over at Trading Economics. Now you'll notice I'm going to do a couple easy things here at this calendar. I'm going to clear the countries because all I really need is the United States unless I'm trading currencies or Forex, in which case I want that more global view. But here is a Trading Economics calendar. And if you scroll on down to Friday, here it is right at the top. There's a third FOMC speaking event. I do not know why there seems to be a better, more thorough list of FOMC speakers on Trading Economics. I love the Forex Factory calendar, but please do check out Trading Economics because oftentimes we'll see that there. All right. Oftentimes we'll see that extra 1 or 2 Fed speaking announcements there. So take note of the time, 10 a.m. and noon. This is Eastern time. Again, 10 a.m. and noon. That's where we want to be ready for any of these hot zones. It looks like Evans is speaking at 10, George and Waller at noon. So this means while it's not Powell, there's definitely a lot to keep an eye on. All right, what else do we have going on this morning? Equities are trading above the previous session high, above that line in the sand. That means I'm going to be kicking off my AM session. We have 5 day trading windows, by the way. We have our pre-market day trading window. We have our morning session day trading window. We have our closing PM session day trading window. That's 3 right there. We have our Asian open. We have our European and UK open. So there's 5 different windows, and they last approximately 90 minutes to 2 hours each. And therefore, this means I'm not looking at a day trading clock that's 24 hours long. I'm looking for particular windows throughout the day. So we're moving into our AM day trading window. We're on the tail end of our pre-market window, and we do have bullish sentiment to kick off the morning. So keep that in mind. All right, so let's go ahead and get to the questions. The third calendar, Avery. Yeah, come earnings season, Avery, I will use the Estimized calendar, ESTIMIZE.com. I'll use their calendar because their whisper numbers are by far the best. I'll even use them for economic hot zones. Actually, let me show it to you here real quick. Where is it? There it is. So this is Estimize, and they have a couple different calendars. This is their calendar for earnings, and then there's also the calendar for different, and actually let me just log in here real quick. And you can use a free version of this. I've got a paid version and a free version, but you can absolutely use a free version of this. And then you'll notice when you click on the economics, you can look at the different indicators and even get whisper numbers on these. They're really quite helpful. Yeah, estimize.com. All right, so another question. Sean asked, with an overnight gap up, when do I look for a sell-off after the open versus a continuation. So whether or not we fade the gap or we gap and go, right? Usually when we have what's known as a true gap. Now, a vanilla gap is simply opening above or below the previous session close. So we're above or below the line in the sand. Now, please remember, gaps do not exist in futures. Gaps do not exist in Forex, really Monday through Friday. On that Sunday, we'll sometimes get a gap. So gaps are only a Wall Street, a stock, an ETF reality. Except for, again, the beginning of the week, we're on a Sunday morning, or sorry, Sunday evening in the US, Monday morning in Asia, we might get a gap. So remember, Monday through Friday, it's only a stock conversation. That means the gap fade that we're typically looking at will kick in after the Wall Street bell is rung. So great question, Sean. This is what's known as a true gap today because we're opening both above the previous session close and above the previous session high. And these have a slightly more sort of gap fade psychology than just a vanilla gap where we open above the previous session close. That said, you still need a pattern. You still need that pattern to set up in order to fade the gap. Please don't presume that there's any way to know if today's the day we fade the gap or today's the day the thing just gaps and goes. What I recommend all traders do is that they follow a pattern within the first 1 to 5 minutes of the morning to determine whether or not that psychology is actually coming in. All right. Okay. So first question from our YouTube folks. Let's get to it. All right. First up is looking at AbbVie. Sure. As a short into the wave. All right. Most of XLV is neutral on the trend. My thoughts on what would trigger a short. Science Spear, yeah, I'm with you. My thought is this, though. Do I want to prioritize shorts or do I want to prioritize buys, longs? And I don't think there's an easy answer right now because we don't have clearly a trend in either direction on the broader averages. And you just mentioned, and I love that you were keeping an eye on the tide. We don't have a trend on the XLV either. It's easier to be a bear. I agree. It's far easier to be a bear. AbbVie, Johnson & Johnson, Pfizer, Medtronic, Bristol Myers Squibb. It's far easier to be a bear in healthcare than a bull. Take your pick. AbbVie is fine. It's one of 5 double red downtrends below. I believe they're all below the 200. Yeah. So if they're below the 200 and they're double red and they're correcting up into the wave, yeah, that looks really, really good. Absolutely. I like where your head's at. The only challenge is this, Iron Spear. If the S&P and the Dow continue to move higher, the high tide effect, that knock-on effect, if you will, from the indices to the heavily weighted sectors in those indices could create a little bit more strength in healthcare. Remember, healthcare is the number 3 weighted sector in the Dow. It's the number 3 weighted sector as well in the S&P. So keep an eye on those indices. If that broader average keeps moving higher, if we see a higher tide, this particular sector is likely going to have to continue with it. But you're right. If there's a place to look for shorts, XLV looks awesome. And let's see. Follow up is, thanks for the home runs at Archer Daniel Midland and SR. Oh, fun times. Yeah, it never hurts if things go in our favor. Absolutely. Manage risk. Move to those break-even stops. Don't let a winner turn into a loser, and we'll carry on. Absolutely. Hey there, Kalwan. Can I share my thoughts on ASAN? It had nice earnings. I recall this one, Kalwan. I think you'd asked about it. It moved higher. It's so let's go through the process. Structure dictates strategy. Strategy dictates our secret squiggles. This is a non-trending market that was on the 1st of September oversold. It's rallied on earnings. So what's the setup now? There's no setup for me here, my friend. We're in the middle of a range. We're in a choppy market. So, if anyone shorted this into the floor or bought it off the floor, cool. But remember, that's what we're really looking at. This is what we're really looking at, the overbought, oversold fade. All right. Next up. Hey there, Rocky. Good morning. What technicals did I see leading up to the sudden drop in the US at the start of the what technicals did I see? I mean, I wasn't up, but I'm more than happy to look at it at the start of the Asian session. So I'm pulling up the 6E because that's the inverse. Most folks won't be able to pull up the US dollar, the DX. So I'm just pulling up a symbol that most folks can pull up. And that's our 6E, which has a 90+% negative correlation to the US dollar. And you said at the start of the Asian session, so that takes us to about 8 p.m. And well, keep this in mind. We had the ECB yesterday, Rocky, so I don't know that it's really a technical conversation. We had a huge macroeconomic event affecting the euro, which is absolutely going to affect the US dollar because the strongest, most steady correlation in any market is in the biggest market in the world. What's the biggest market in the world? Yes, Forex, but the biggest market in the biggest market is the euro versus US dollar. They're a negative or inverse correlation. ECB hot zone, bullish euro by just before 2 p.m. Eastern. Really, we could just say it's follow through from the sentiment that organized. And here's to the left, you can see a lot of chop. By 1:45, we're in a double green, and we just continued from there. So if you want to look at the technicals, that would be the 8/13/21/34. That's our multi-trend. What is the structure of the trend? Is it chop? Is it up? Is it down? And then the catalyst would be the ECB from yesterday. All right. Next up is Alex asks, good morning. Good morning. Daily 6E short. Oh, okay. So from 6E to 6E. I like it. I like it. Yes. Yes. However, remember, this is double red. This is really important to keep in mind. And I've been saying this for a while, and I'll stick with it. The best days, the most bullish days for the US dollar, and let me just show you the US dollar here, gang. I'm going to pull up Trading View. The best days for the US dollar are behind it. I don't want to short it, right? But I don't want to presume we're going to have the kind of strength we saw earlier in the year when US dollar was gearing up for the rate hike cycle to really get going. Now that the rate hike cycle is well underway and arguably towards the tail end of the target rate probability that it's likely to be reached and possibly peak in December, we're down to fewer months of the rate hikes. We are printing less money. You can see the money, M2 money supply contracting. That's US dollar bullish. So my thought here is we're not going to see the kind of move we saw earlier in the year, but we are probably going to see a grinding higher overall in the dollar, which means a grinding lower overall in the euro. Do not put your initial targets any lower, your initial target, right? Any lower than the near-term low, and then we'll see if we can punch down to lower lows in the euro. But remember, gang, we are tightening in Europe, and a higher rate is usually going to be a bullish catalyst for the currency. The only reason the euro is still in a downtrend is not because they're hiking. You would think, gosh, why wouldn't the euro be strong? But remember, if the US dollar is stronger, that's going to keep the euro in a downtrend. All right, next up. Hey there, John, a longtime listener. Thank you very much. We're coming up on we've been doing this for coming up on 2 years. Next month, October will be 2 years. We've been doing our daily charts and coffee. So I appreciate that. First time poster. Awesome. At one time, I introduced us to, oh, right. Yes, I saw that in the, I saw it in the free trading room too. Anderson Advisors. It's not an individual person. I think it's the person who's done the awesome webinars for us here at Simpler since gosh, 2017, 2018 is my buddy Toby over at Anderson Advisor. He's not the one that's going to work with us. I don't even work with Toby, and I've known Toby for probably a decade now. But they have an entire team of folks. My team over at Anderson involves someone who handles my bookkeeping, someone who handles my minute stuff, someone who handles, it's a team, right? That's what Anderson. So I just want to make sure, because a lot of folks said, Rog, I want to work with Toby. Toby doesn't work with anybody anymore. He's got that. So, but Anderson Advisors. I've been working with them on and off, learning from them for well over 2 decades now. So that's who it is, Anderson Advisors. All right, next up is, oh, and by the way, gang, their entity and they're experts. I mean, there's a lot of folks that can create entities for you, but this isn't about how I can get, well, anyways, reach out to them, because they do have a lot of unique ideas around what it is to be a trader. What's the best way for us to maximize our, frankly, protection, as well as optimize clearly taxes. So check that out if that's something you're interested in. It's always a great problem to have. I'm making money, Rog. How do I keep more of it? All right, AbbVie. Weekly. Oh, weekly? Oh, gosh. I will seldom look at a weekly unless this is for a portfolio. So, Bob, yeah, we can take a look at the weekly, sure. But I just want to make sure everyone knows I don't trade the weekly. Most of my investing will, for my portfolio, I will typically look at the weekly for it. Do I like the weekly chart of AbbVie? I can't say that I do. It's not terrible, though. To your point, oversold stochastic, neutral market, previous trend was up. Continuation to the upside is most likely. I would not want to short it. So if you're looking at the weekly time frame and you can tolerate, maybe the market pressuring 134 again, about 6-7 points from where we are right now, I'm fine with that. Yep. This would be playing a potential continuation on the weekly. But please remember, when I talk about portfolios, what I'm talking about is, one of the things we do in the Sector Secrets Mastery is once a week, we get together and say, hey, what's happening on the weekly? Minimum 6-month time horizon, ideally 1 to 3 to 5 years. How do we build positions for our portfolios? And that's, for me, normally going to be on that weekly time frame. So this would have a far longer time horizon implication. All right, last question as we wrap up. Thank you as always for all the questions, gang. Is gold a buy here? I mean, it's not a short, D. It's definitely not a short, but I can't say it's a buy. So we want to always eliminate one side of what we could do, take one side away from consideration. In other words, do I want to be a buyer or do I want to be a seller? Once we have that kind of clarity, then we can move on to whether or not there's a buy happening right now. So I love that you're definitely looking at one side of the market. Love that, D. So once we eliminate one side from contention, then we can say, all right, where is the buy? And I would say, as long as we're neutral, 1693 down to about 1677, oversold stochastic, neutral market trend. That would be a great place to look at micro gold, gold futures, even GLD calls. All right. Thank you as always. For being here for Charts and Coffee. I will see you all on Sunday for our weekly Raghee report, 6 p.m. Eastern. And enjoy the rest of today. Heads up for the Fed speaking engagements. We talked about that at the beginning of the show. And gang, be good to each other. I'll see you Sunday.